Hey there, Ashley Cheeks here. Today's topic revolves around one of those things that existing entrepreneurs wish they would have known from day one when starting their business. This is related to taxes and how you think about expenses and profits. Now, when it comes time to think about tax season, the first thing that comes to mind is minimize my taxes, minimize what I have to pay the government out of my business. Now, when tax season rolls around, most entrepreneurs, whether seasoned or fresh newbies, they take the same approach when it comes to minimizing their taxes. They'll either underreport their revenues or they will overreport their expenses so that they can avoid a bigger tax bill. Here's where this becomes a problem. If you ever decide you want to go for funding, whether to an investor, to a banker, or if you want to bring a partner into your business, you're going to want to show healthy year-over-year revenues and profits. So if you've been underreporting these, it's going to bite you later. Now, most institutions require that you actually submit your previous year's tax returns. A lot of investors do the same thing, and many partners ask for it as well. This is why you cannot cheat the system without having a problem down the line. You need to have at least 3 years of maximized revenues and profits in order to get any kind of funding option. Plus, it helps you understand as the business owner where your business really stands. Now, I understand that it's really hard to swallow if you have to have a huge tax bill, but you need to see that as a rite of passage and not as a bad thing. If you want to make sure that you're maximizing your tax return situation, which you should, make sure that you hire a professional to work with you on the legitimate areas where you can minimize your tax exposure. However, I caution you strongly, do not make the mistake of underreporting to get to that goal. I talk with a broker that actually works with businesses who are trying to sell. They're being bought out by big companies. We're talking multi-million-dollar deals. And he said without fail, the number one problem he comes across is these businesses who did really great. They were thriving. Maybe they were a cash-based business and they underreported their revenues and their profits, which undervalues their business on paper. So when they go to sell their $1 million business, they can't because they're only reporting $200,000 in income. So you have to make sure that you're reporting realistically and honestly so that you can maximize the actual potential for your business later, whether you plan to sell, take out a loan, or bring on an investor.